I rarely speak about individual stocks on these weekly updates, but this week I'm going to begin by talking about UnitedHealth. And that's because many of the advisors at KCAN have been asking me over the last several days whether it's okay to buy this stock. And the reason they're attracted to it is the shares are down so much year to date. They're down about 36%. They were down even more a few days ago, but they've had a little bit of a bounce. And that puts it at a very attractive multiple of 13, 14 times earnings. And as a company that's always grown its earnings quite reliable, that seems very attractive. But obviously with the shares down so much, there's a bunch of problems going on with the stock. I'll give you the quick rundown. So far this year, it's missed on earnings, which is something it's rarely ever done. Its CEO resigned in a surprise. It withdrew its forward guidance, which also is unusual for a company that reliably grew its income for a long time to suddenly say that they don't really know what's going to be happening over the next several months is unusual. The last piece of bad information is the Wall Street Journal report that they're being investigated for Medicare fraud. Now, UnitedHealth's relationship with the U.S. government is very important to its business model. 40% of its revenue comes from the federal government. UnitedHealth basically manages Medicare Advantage plans and some Medicaid plans. So this is a big business for them. Part of UnitedHealth's model, and something that's really become part of their model since Obamacare was passed, is the company's vertically integrated. That means it's, besides doing the insurance and managing the healthcare payments, it also is like one of the largest pharmacy benefit managers in the United States. It's one of the largest employers of doctors in the United States. It has a payment system for paying medical bills, et cetera, et cetera. So if you think about it, a lot of times acting as the insurance company, it's paying its fees for services from one of its own divisions. And if there's some question about Medicare fraud, the question would be whether it's overpaying itself for those services. I don't know if that's exactly what the investigation's about, but it's a logical assumption. At any rate, the whole questions about Medicare, the whole questions about guidance, basically reflects fears that the way UnitedHealth does its business is going to be under scrutiny, and there could be some changes in its business model, and most of that scrutiny would be how it does businesses with the US government. So if you're buying it now, I think you're just saying, well, yes, some bad news may be coming down the pike, but the stock's already beat up enough. It's at a cheap multiple, even if earnings miss are not as high as people expect right now, it's still okay. One of the aces in the hole you have is that the medical industry in the United States is the largest lobbyist to the federal government. They spend more than big tech, they spend more than the energy industry, and so therefore it's very difficult for the government to make dramatic changes on the way it deals with big health companies such as UnitedHealth. So I'm done talking about UnitedHealth, and that segues to me about the headlines with Donald Trump trying to get his big, beautiful budget passed by the US Congress. And if you're hearing the headlines today, they kind of focused on something called SALT, which stands for state and local taxes. And basically a small group of Republican congressmen, and Donald Trump needs their vote in order to get the House to pass his big, beautiful budget plan. They're balking at the current plan because it doesn't raise the deduction for state and local taxes as much as they hope. These are congressmen from states like New York, where they have very tough re-election prospects. And of course, New York is a high tax state. You have a lot of people who really want to deduct their state and local taxes from their federal income tax returns. They don't want to pay tax on their tax, so they're fighting for that. Unfortunately, the US has a budget problem, and if these group of congressmen who are kind of balking at Trump's plan get their way, that would add about $50 billion a year to the US federal deficit, which is basically pushing things in the wrong direction. So let's look at the deficit as a whole. Trump wants to extend the tax cuts he made in 2017 when he was president the first time. That adds about $400 billion to the federal deficit. Trump's tariffs actually bring in about $150 billion, or probably will bring in about $150 billion in income. So he needs to find $250 billion in spending cuts. And of course, it gets worse if he winds up raising that SALT deduction, then they need to find $300 billion in spending cuts. And this brings us back to talking about Medicare and Medicaid. So if you're looking to save money and you're a congressman and the money is gigantic, like $300 billion, you need to look at big programs. And Medicare is a $1 trillion program. Medicaid is a $700 billion program. So both of those programs are under the gun for some changes that are that the Congress will use to try to reduce the deficit. How this thing's going to work out, I don't know. Changes to Medicaid and Medicare are going to be absolutely unpopular with many Republican congressmen who live in districts where they have a lot of working class people who can't afford to pay more for their Medicare coverage and also benefit from Medicaid programs. So we'll see how Trump manages to get things through, but as it looks now, the budget deal that goes through, if they pass one, will probably not be too friendly to the deficit, meaning it's got to make the US deficit worse. And that might be the reason why you're seeing Treasury yields, despite better inflation numbers, consistently trade at the high end of their recent trading range. Before I sat down here, the 10-year, I looked at my screen, the 10-year yield was about 4.5%. So far, that really hasn't hurt the market. I was very happy. Last week, I kind of told you all I'm still positive about the market. And the market was up 4 of the last 5 days. It was down a little bit last night. But anyhow, the market has been trending higher. But if you see Treasury yields pop, meaning they go from the 4.5 they are now to 4.7, 4.8, which is not far away, I think the market's got to get very nervous and you're going to see stocks sell off.